Possible buy here above this breakout bar. It's a similar situation to what we had on the 26th. I guess it's hard to see right now because my order's in. There, just got filled. So we had a bar 1 breakout, but we should have gotten to yesterday's or the prior day's high. Entered a tight trading range and got a 1 bar breakout. Here the buy didn't trigger. We didn't go above the breakout bar, so there was no buy there. Similar situation today. Today we did go above the prior bar. But if this bar closed on its low, I think it's worth exiting. Place my stop to exit 10 cents below this bar. We have the measured move of this opening tight trading range a little bit higher. No bear signal and didn't trigger. And now it looks like we're getting a second leg up from the breakout. So hopefully reach my target, just a little bit away. Missed it by a couple cents. Possibly should have been a little bit more aggressive there. Second leg up and tail on top. I move my stop to below this bar and have my target 10 cents above my entry. So essentially just risking 10 cents to make 10 cents now. I ended up scalping out with 10 cents. I got 2 cents away from my target and then reversed all the way back down to my entry. So at that point, I still thought it was more likely to go up because we're in a bull breakout, but I didn't like it. I didn't like to see it reverse the entire breakout bar because that's essentially the second leg up from the breakout, and we reversed the entire second leg. So I didn't like to see that. So I decided to exit with only 10 cents on 20 shares, so up $2. Sold below this outside down bar, second entry sell, and looks like we're forming a micro wedge up here. So I think it's reasonable for a possible high of day. Looks like it was just a double bottom bull flag instead. So it was about $7 on it, I think. So down 480. That was probably a little bit aggressive. I'm going to try this sell one more time. Tight trading range here, but we're at the signal bars in the upper half of the tight trading range. Got filled there. I thought this small bar in the upper half of the tight trading range was reasonable, especially considering I was okay selling here. This just happened to be a little bit too low, and we needed one more push up. But once we got it, we got a small signal bar at the upper half, and I thought that was reasonable to take. It's possible that the target is just below this doji here, but I think we should get down to the moving average and the apex of the tight trading range. So it looks like bull's giving up. I think we'll get a couple legs down to the moving average from here. Possibly a bear trap, so I'll exit above a bull bar, closing on its high. If I get stopped out, it'll pretty much just be a break-even trade because I took off half at 20 cents and I'm risking 20 cents. So I think I ended up losing 40 cents on it. Did not expect that kind of reversal after what looked like the bulls giving up. So clearly a surprise bar up. Just sold below that bar. Every low so far has come progressively closer to the moving average. We're at bar 41 right now. So we're approaching the time when we should be getting down to the moving average. We have a second entry sell up here and a wedge top, so I thought it was reasonable to sell there. And look to sell more higher if we get another new high. We have 400 a little bit higher, so we might get one more push up to 400 and then get the move down to the moving average, but this is a low 2 setup and a wedge top, and we were so close that I thought it was worth selling here and then looking to sell more if we get the new high. It's been in a bull trend the whole day, but it looks more like a bull leg in a trading range. A lot of trading range price action. Every breakout point is getting overlapped by the next pullback. So it looks more like a trading range than a bull trend, even though we've been above the moving average the whole day. Yesterday is a similar situation. My target's here, so it's going to be hard to see. Take it off for now. So here we had this move overlapped this breakout point, but then we entered a small pullback bull trend and didn't really get any signs of a sell signal. But even then, anywhere someone sells in here is probably okay, because we're probably going to come down for a couple legs and get down to the moving average. Here, this looks a lot weaker than yesterday. We're not getting that small pullback field. This could be considered a small pullback bull trend, but a lot of bear bars and a lot more sideways than we had yesterday. This was a reasonable sell, so I think even if we go up for another half an hour, we'll probably get back down here. And if we start to reverse down here, this was a triangle and a potential final flag. So if we reverse down here, we could get to the apex of that as the final flag. If we go higher, then I would look for this second entry sell as my target, or the moving average if the moving average catches up to the price. I have my target at 10 cents now, 10 cents below my entry, because the moving average is drifting upwards. So I'm trailing it with the moving average. It's actually probably better for me if we break out first towards 400, because then I can get a sell at a higher price with a greater distance from the moving average, so that'll increase my profit. Yesterday I felt comfortable having my target a little bit below the moving average because we had the buy climax low, which I thought was an obvious target. Today we don't have that structural target, at least from my point of view. So I'd rather exit at the moving average, because there's no real buy climax low. Maybe the apex of the triangle in the tight trading range, but other than that, I think that's the most clear. The moving average is the most clear target. Kind of a similar situation to yesterday, because I have 400 as a magnet on SPY, but we've already reached 4,000 on the S&P 500 and the E-mini. So I feel like the SPY's targets in terms of all-time highs and those larger, broader whole numbers, it seems like they hold less weight than the cash index and the E-mini, because I've been noticing that more and more often, that the targets I have on SPY are not being respected as strongly as the E-mini. Even when it comes to yesterday's close, the E-mini goes 15 minutes more than the SPY, and usually yesterday's close is more important on the E-mini rather than on the SPY. So I've been noticing that more and more, especially the last couple days. My target's at 53, and it touched 53, but I think we should get a little bit lower than that. We should get below the moving average. Got filled there. Was hoping for a little bit more upside to sell higher, but I think the premise is still valid. It was unfortunate that it was such a grinder today that the moving average was so close to the entry. So I made $2 on that, and down 360 now. And for this trade here, I bought and quickly got out break even. I bought above this bar closing on its high, but there were sellers at every high before that, so it just wasn't looking quite as strong as I thought it should, and I impulsively bought and decided that it's not worth testing it out to see if it works. I'd rather get into something that I'm more confident about, so I just exited right away. I think it maybe lost 20 cents on that, or 30 cents or something. After this bar closed with good follow through, I bought 10 cents below the high, because I think we're going to get a new high. We may get up to 400, but I think a new high is the minimum target. So when this bar closed near its high after the big bull surprise, I bought at 76, betting that we'd get up to 86. Touched 86, but didn't go above the high. Maybe a little bit greedy, trying to get betting on a new high instead of just testing the high. But I think probably buyers below here. About 20 more shares. 10 cents below that low. Now look to exit at that low. A little bit careless with this one. When it didn't get up to my target and then reverse back down to my entry price, I think I should have just gotten out there. I'm okay with adding here because it's minimal risk. I'm going to exit below the bar. And there's only 40 seconds left in the bar, so not much risk on that second entry. But just not the way I wanted to manage that. This is probably buy the close actually, not necessary to sell below. Because we're probably just testing this high. But I want to get out quickly, so I'm really not happy with that one. Got to my target, and I turned it into a different trade. I shouldn't have done that. I mean, this ad here cost me $1, but it's just the fact that it touched the target and then came back down. We had already completed what I thought it should do, and I just ended up exiting at a 50% pullback and this high. So just bad management, and it just got back up to that low. So lost $5 on that. So down 860. I'm not really unhappy with that one.